Freddie Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play option. Omega, you're trading home, where every move makes you feel less alone.
Morning, everybody.
Good morning. Good morning.
Good morning.
Good morning.
I feel like coked out Conor McGregor. I've got this allergy, and I just keep finding myself going like that.
Wow, Conor McGregor.
I didn't know he was a Coca-Cola fan.
I didn't
He's
either.
a Coca-Cola enjoyer.
He is a white Coca-Cola fan.
I didn't know that. Is he? We haven't heard much of the old Conor McGregor.
Wait, I think he's running for. He's not running for office in Ireland?
He's running for the president of Ireland.
Why not? You go from wrestling to president. What's wrong with that?
Yeah. And he is fighting, I think, at the White House next year.
Is he fighting again? I thought he'd retired like twice.
They're calling him out. They're calling him out because, they're going to do a UFC fight on the White House lawn.
I saw this.
That's awesome. That's on the White House lawn. They got a big yard, right? Nice yard.
Might as well use that prime real estate.
That's right.
Mm-hmm. I'm glad to see it's finally getting used. I'm glad that finally the lawns are getting used. So, listen, another day. I'm going to be honest with you, fellas. I had a really good week last week trading, and this week has stunk.
Yep, same. It's not as good.
I just a low vol bleed down is not my favorite. It doesn't help.
It's true. Although VIX is up, creeping up a little. It's up.
VIX is the highest today. I mean, VIX is a good chunk today. But
what I've learned from is I'm making this journey from, I always forget the word, discretionary trading towards more money ball, which
that's right.
I love that analogy. That's great
to money ball. Yeah. And I think there's room for both. Right. In some degrees, some trades, whatever, but it's a tremendous help. But as I'm thinking of, see, what's also good is when you're telling a story as you get older and you could get halfway into the story and
just
you forget what the heck you were trying to make.
I do that all the time.
And so I thought I had a good point to bring up here. And folks, but this is just a senior moment. I forgot exactly.
Well, listen, I know, like the automated trading. Here's the thing: on days when it's moving a bunch, I can get myself in trouble. I say that humbly, but also like, I can discretionally trade around positions pretty good. That's actually one of my few strengths that I have trading. Is I can use a base position to discretionally trade around it. It's hard when it's bleeding down because the only way to really deal with that is to get like negative deltas with this type of move, because you can't like really play the vol because the vol's not exploding, and so you can only do it with deltas, and it just gets like
a put debit spread, a risk reversal, sell a call, buy a put spread.
Yeah. What
do you think, Troy?
Well, yeah, but here's the thing. This is what I'm saying. Everything comes with a cost because now you're delta neutral, and so any move up, you've already locked in your loss.
Yeah.
When you do that.
Both ways.
And
you're saying in the bleeding down market, like we're doing a little bit.
Yeah. Like anytime, the way I always think about it is if you were long units and you were a long straddle and you had a move and you got negative 30 delta. Well, if you get neutral, you've locked in profit, right? Yeah. You've scalped, you've gamma scalped. Well, if you're short a straddle, and now you're negative 30 delta and you buy it back and you get to zero, you have locked in loss. That's the way I look at it. You've locked in the loss of the thing because it's gone against you and you got back to neutral. And so I don't like to do that. As a general rule, I don't like to lock. I like to lock in profit. I don't like to lock in loss.
Sure. Yeah.
So
One thing you said, Troy, now my senior moment got back to me. I got it. But, when you think about one thing I've learned from automated testing and you guys with the back testing and bringing in the movie Moneyball, any opportunity we can, is when you have a week like last, for me, I've always been on trades, and the way I've taught is, risk management being key. Yeah, you might look for 10 or 15% profit. And it is a simple you don't want to lose much more than you make because you're average winner. It just, the numbers won't work over time. And with range bound trading, especially as you move further out from like 0 day and stuff, you can get, on 15 to 30 day stuff. If you stay, at least what I've noticed, when you stay in the trades, maybe 30% of the duration, you can get 70-75% win rates, right? Just the way, if you just look at calendars, butterflies, those types of things, if you stay in the trade less time, there's less opportunity to go past the break evens, blah, 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 blah. But what I've learned is, when you look in the world of expected returns, like last week on DCs, did you pull some 30% or 40%? Yes or no? Yeah. And that goes, people think, okay, 30%, but wait a second. There's some, in the terms of a year, that does a lot to erase, to give you some cushion so that you can, if this week is slow and you lose 15% or whatever, you're still way up. And I think, that's an important part of trading that I've learned to trust the numbers. I'm still not there yet, but I'm still learning that by trusting the numbers, if you can pull 2 or 3 40% in a year or whatever, boy, does that help your expected return, right? When you say you guys, last week to get 30 or 40%, that really helps you.
Well, it's like a scout coming into you and saying like, hey, this DC, this double calendar's girlfriend is ugly. And you know what that means, right? Guy doesn't have any confidence. Trade doesn't have any confidence.
No confidence.
And so what it does is, though, to your point, is, well, this thing gets on base, and every once in a while it gets a home run. Not only do these DCs get on base, they also will hit home runs sometimes. The best of both worlds.
And that's what you need. And I think because, that's where people get, I think, discouraged. And that would be the difference, and I'm sure you could have a whole week on, DCs versus credit spreads, right? And they're both great. But the thing about DC, credit spreads, it's the opposite, right? Not the opposite, but you're winning most of the time, but your loser could knock out a week or more. And it's not, to me, it's not that one is better than the other. It's having, I think, back to the best philosopher of all time in the movie Cool Hand Luke, you got to get your mind right. And I think it's just, if you're trading credit spreads, to me, it's a different mentality, wouldn't you say? And I think Troy's the philosopher. Troy, would you say there's a difference in the mind of credit spread people versus DC people? I can't even imagine if Troy had an answer to that.
Well, listen, I know both think the other is insane. That's the thing I do know. I see both. Listen, it's a back and forth because you'll see credits. Credits, there's some million ways to sell credit, but let's say there's a particular way to sell credit.
Like vertical credit spreads like iron condor.
Yeah, condors, whatever. And you'll see people, they're like, they'll have some losing days, and all the DC guys are like, glad I don't trade premium. And then these DCs will get crushed for a week, and you get all these people will be like, well, these DC guys finally had it coming to them. Like, it is what it is.
I love it.
All I know, Dan, is, and I showed Matt and Rusty this yesterday, the boat has been loaded for a volatility event. I was
waiting for an announcement. So usually Troy's in his cave with volatility, and then you don't know. Even Matt will be surprised. Troy say, "Yeah, I'm loaded for bear." And so the ship has sailed. You are ready militarily. You are ready for it down.
The fall 2025 voyage has commenced.
Wow.
Now, will we make it home? I don't know. I don't know if we're gonna make it home. Will we come back in a gold-plated ship? Maybe. I don't know.
I like it. So you're actually in the vehicle. You're ready if there's something that goes on. The only thing that, and I mean, it doesn't. You look at VIX in the last couple days, and it's been like VIX is basically saying down 40, don't bother me. This is I don't care. But we all know. So right now the market's saying, it doesn't matter what the news is. It doesn't matter. We're not going down, much at all. But we know that can change real quick, right? I mean, like in 48 hours, that whole mentality, the cloud can come over. And
and what's interesting is VIX 9-day has not woken up.
That's it.
So it's
right. That's a great point to bring up.
It feels like we're going to open close to 6,600 today. We were just, what was the top? I don't know.
66.99 in SPX or something.
Did we get to, okay.
I don't know if we went over 67.
Did we chat? What was the top?
Yeah.
It's kind of been a pretty relentless push up. And so, if we pulled back 2-3%, or a little deeper, if we pull back to 6,400, I mean, we're going to open at 6,600. I think 6,500 is a big number. If we pull back to 6,400, I mean, I don't know. Like, fourth quarter is usually pretty bullish.
Yeah.
And here's the recipe that the market's up quite a bit. So anybody who's running a discretionary fund who's not up as much as the market, a lot of times in the fourth quarter, the thought is, this isn't my thought, this is what smart people say, they've got to make up for it. So, usually that's a lot of, typically a lot of people think fourth quarter pump is just these fund managers levering up.
Yeah.
And just trying to close the gap from where they didn't catch up to the market.
What are we year to date up in the SPX? Are we up like 10, 11% for the year? I'm guessing
it's not as much as we think, because
you're right.
Because the market's up.
Because the market went nuts November to January, and then basically January to May, it just kind of like faltered a little bit.
Yeah. 12, a little under 13%, 12.8%.
Yeah. Now listen, I mean, I would prefer my number, and everybody's number is different on SPX. My number is 2,200. If we can get to 2,200, you will never see me again. I promise. I will be gone.
Man, he'll be wearing camouflage the rest of the show. 2,200.
Just but final thing with the tail stuff, I have developed through the years different strategies with it, and you kind of learn as you go. Like, I've been doing tail hedging for 8-9 years now.
Yeah.
Different vol events. One of the things that's hard. So like VIX, August 5th was it 2 years ago at this point?
It was 2024, I think.
It's the last year.
Yeah.
August 5th.
I think so.
The Japan.
That random Monday. Yeah, Japan. Random Monday where you open up VIX at 80. But it didn't. Yeah. But here's the problem. So here's the thing. Let's say you had VIX calls.
Mm-hmm.
Let's say they're at the 80 strike. And you look at it pre-market and you say, Mama, book the vacay. Mama, get the cruise ship ready.
Yeah.
Well, we opened down 20 points below that. So you're still crashing. I mean, you're still cashing in on a very nice payday with that tail.
Yeah.
But it's not 80. Same thing with SPX puts, SPY puts, is you have to wait for the market open. So one of the things I'm starting to do more now is, and I started doing this with Liberation Day, is I want things that are going to cash in on open, and I want things that are going to cash in Sunday night at 6 p.m. I want all of the things that I want things that trade overnight.
You want Chinese delivery coming to you hot with extra egg roll. I want these futures contracts.
I want that Amazon. I want that Amazon drone just zipping by.
So you're thinking ES futures?
So right now I've got a mix of S&P and then ES and then VIX, and because it also makes it easier psychologically to take them off. Because if you've ever had, like, back in the day, like I had Volmageddon of like 2018 fashion, I had like 30 spy puts because didn't have any money. So I had these 30 spy puts. Well, suddenly they start cashing in.
Yeah, that was not
And-
nothing during Volmageddon.
No,
Most
it did
people-
great, but it was like pulling teeth psychologically because this is all you've got, and you know that once Vol's up, you're not going to buy them again. Like you can't. This is your only shot. The bullets you have during a vol event are the only bullets you get during a vol.
That's right. That's right.
You know.
Why I like your volatility cocktail. I like it, Matt. He's had the combination of VIX, SPX or SPY, and then I like the E. I've seen more people do the E futures because it just gives you ways out, right? You can get out Sunday night.
Well, and I mean, this is a separate conversation, but SPX does trade extended hours on some brokers.
IB,
but you know that if you listen to the
stinks.
Liquidity's terrible.
Yeah.
But you know that all the you just watch Vlad from Robinhood start talking about future markets, and I mean, I think a lot of these people envision a world where everything's 24/7, 365.
I can't wait. I would love it. Me and you just went to the OO show, 3 a.m. edition, 4 a.m. edition. So, yeah, final thoughts on that. I do think the ES a lot of times can pay out just because a lot of times a vol event, like Liberation Day, that Sunday, I think he made the announcement the Wednesday, we crashed. That Sunday night, I mean, I was looking at it in real time, and you don't get many of these moments, but it was truly, if you watch the markets, it was a truly terrifying like 30 seconds when it opened because we opened down like 180 and we in like 10 seconds were down to like 300 points down.
Wow.
And then it stabilized. Well, if you have ES puts at that point, you can hit market and get like market is what you actually want during that time frame because you've got something that everybody wants. And so things get a little nuts, but anyway.
Well, and there is, I mean, we need to do a whole week on hedges.
Oh yeah.
And talk about backtesting hedges. Cause it's a little bit, it's not that there's not a problem with backtesting hedges, but by the nature of the very few occurrences, it's the value that you get from a backtest is just different. Cause there's so like if you're talking a true tail hedge, like buying one delta 100 DTE puts or whatever like that, those hit profits so rarely that it's like, well, in 5 years I've got 3 examples. Not that it's not useful, it can be useful, but it's a different thing. Anyway, that's for another show.
Well, I agree, and we've got a couple weeks lined up. I mean, let me say this real quick too. I'm going to say that we've got a very special guest tentatively scheduled for not tomorrow, but next Friday. And I'll fill you guys in this week, later, once I confirm it. But it's one that if you guys are in the OO land, it's going to be one that's something we haven't done before. It's going to be pretty interesting.
I'm not sure. I know there's a couple potentials.
There's a couple potentials, and
I don't know.
It's not LeBron. It's not LeBron.
Publicly, no.
There was some news about LeBron, which we'll probably cover on tomorrow's show. Follow up to that article that he quote unquote wrote for the newspaper. We'll have to. I'll dig up some resources.
Hey, quick question: if I'm Troy, I mean, obviously people at OO will have different brokerage accounts. Some might be a Tasty. Some might be you. I mean, you have different. How many different firms, Matt and Troy, that you guys have that you can?
You don't want to know. So
you got a lot. But let's just say with Taste, aren't there some that when you bring up e-futures options, Troy, some firms will make you jump through hoops to get these things going, like a futures option. I hear, am I correct on that? If you have an account, let's just say you have a regular account, you're trading options, and you have Tasty, it's pretty seamless to do futures options. You don't have to go through. If you decide to trade it, you don't have to go through a lot of hoops. Is that true? Do you know? Or
there's layers to it's. I'll say I can speak personally, but don't quote me as like industry wide because I've had my account just speaking personally at Tasty for a long time.
Yeah.
And I've always had the highest tier of it. And so I don't know if it's a tier thing, but I mean, Tasty's happy for me to trade ES futures. Like they
Futures options, you mean?
futures options. Yeah.
Okay.
They are very, I have found Tasty to be, as far as data provided, very good with that stuff. But again, it's so people have so many different viewpoints on all that stuff.
Because I'm just trying, if you're a newer trade, not a newer, but if you're trading, you haven't done futures options, and you say, okay, things are cooking, I want to be able to do futures options. Do you have to get another tier or whatever, or is it?
Yeah, I don't know. I don't know. I mean, I know with margin you have to have a different tier. So
okay.
And ES uses span margin, so it's a little different.
Oh yeah, span margin. Yeah,
it's like a poor man's portfolio margin, I think. But anyway, listen, we had someone reach out and say, "Can you guys take a look at a test for me?" And we usually don't do this, but I thought it was, sometimes it's nice to reach in the grab bag, read the correspondence, and let the people know that we care. Mm-hmm. And so I'm not going to mention their name. I'm just going to share the test. If you're watching, thanks for playing, and hopefully this helps. So, here we go. Matt, what are we looking at?
Okay, I am just looking at this today. So it looks like it's a daily trade.
Right.
That goes on at near the open whenever VIX is below 25. And the only qualifier is the VIX overnight move down is a minimum of 0.1%. So it would not go on today. VIX has moved up. So, and it's just a fly. Here's what I like about it. There's no management. It's just a fly. You just put a fly on. So, 35 delta on the, okay. So the structure of it is, sorry if I look like I'm squinting, it's because my camera is blocking the test. So the structure of it is it's a 30 wide, and the closer strike is at 35 delta. So your break even on this holding it is going to be getting to 35 delta plus the cost of the debit. And then I guess it could hypothetically go way past that, but most of the time that's going to be where you want to get to. You got to get in the tent, right?
And you're buying a 35 delta.
That's right.
You're buying a 35 delta, and then you're selling 2 calls 30 above that, buying 1 to fly it off 60 above the original 35 delta.
Dan, I remember you talking in the past, teaching on a concept called time bomb butterflies. Can you give the people what a time bomb butterfly is?
Yeah, I mean, time bomb butterflies were probably one of the more popular strategies in the pits. I mean, some of the traders use them to price things just because a out of the money butterfly, what's nice about them is they're cheap generally. Now, this one isn't for different reasons. Right? This is, I think, because this is wider, wouldn't you say? This is 30 wide. And really, when you look at this butterfly, you're buying 30 wide. I mean, when you buy a 35 delta, and if you're rounding it a little bit, I mean, you're buying very close to the at the money. So you're buying an at the money, you're selling 30 points away from there. Well, 30 points away from there. Let's be honest. If you look in a 0 day on this strategy, correct me if I'm wrong, in a low vol environment, relatively low, 16, 17 or under, this to me is basically you're buying a call. Right? Am I right? I mean, because if you look, I'm looking at it right now in SPX. If I'm buying 35 to 40 delta, it's like 66.40, 66.45, assuming a close of 66.37. Well, if you're going to sell 2, am I correct here on this? Sell 2 30 points up. Well, 30 points up, the options are trading at like under a $0.50, right? So in a way, because it's so wide in a low vol environment, you're just buying a call, right? And so, but the concept in this particular example, am I right on that, Matt and Troy, are thinking on that?
Well, no, yeah, the price. I mean, the price. If you look at the price, even that first one, most of these are $5, and I mean, you're paying $6.45 for the call. You're collecting 55 cents and then buying 15 cent. I mean,
that's to me, you're basically long a call. But for me, when I think of this concept, time bomb butterflies have always been my favorite way to take a shot, right? But they're let's just say real quick, so time bomb butterfly just means you're doing an out of the money call or put butterfly, right? And it's my favorite speculative trade because A, I'm horrible at picking direction, so I'm usually wrong. So, but B, they're cheap. They're going to be your best, much better than like a long call or a vertical spread. They're going to be your cheapest, but your highest potential yield for a spec shot, right? And a lot of it is you're not leaning a lot of deltas long. Like where I like them a lot, and we do them, it would be like, okay, you have earnings coming out Thursday or Friday with 1 day left. You can do a time bomb butterfly, sell the short at the expected move, right? And you could do a butterfly for 30 cents, 40 cents, so it's a cheap shot that could go to 200% or 300%. And so people like these and they plant them, right? I mean, you can plant them. A lot of people do it at the expected move in SPX. Like, look at the expected move Friday, right? So the expected move Friday in SPX that's tomorrow, let's say 50 points. And so maybe you put, if we're going to open up near 6,600 or something, if you think it's going to go further, you put a time bomb butterfly, 20 wide or whatever, place your short at like 65.50 or something. You'll pay just, you're not a lot of delta, so it's not as risky, but you'll pay a little bit of money. But when they, if it goes near the expected move, those things will it's like a tree growing in a day. It's like, wow. It's like, remember the chia pet? Remember?
Yeah.
Right. So I didn't mean to give you
a time lapse.
Long-winded, but I think, there's different ways to get long or short. You can buy a call or put. You can buy a call or put vertical debit spread. But a time bomb butterfly is just saying, hey, I got a call vertical debit spread for the upside. I'm too long deltas. How do I cut my risk? Add a call credit spread on top of it. So balanced butterflies are your cheapest way to do it. Here, in this example, it just seems like it's just a long call. And if it's just a long call and you're leaning long here, my only suggestion would be, why wouldn't you have more like, usually when people have a bullish strategy, they're making it more orb related, or they're making it more like SM, what would you call it? The S.
Yeah. I mean, if you run this without the other legs, it's going to be about a 10% capture rate.
Oh, really? Okay.
Yeah. So it's interesting. And there's people saying, run this as an orb. We can. Today, I don't know if we're going to have time to look at the different configurations.
We'll continue it tomorrow. We'll continue.
Yeah. Okay. So there, 10%, about 10% capture rate.
Wow.
And so you're right. You're long the call. It very rarely goes past that short leg. So the thing I like with a butterfly setup is that if you're unmanaging it, the only downside to a butterfly setup, there's only two. Number one is that it's a little bit harder to execute because you have more legs, but just marginally, slightly.
Wow.
Number two is if you have an upside absolute explosion and go well past it, which does happen, but it's not super common, so I like the fact that most days when you use the fly structure, you're just basically buying it for a discount.
But one thing, I'll call this the mother-in-law syndrome, right? This is a bad analogy. I love my mother-in-laws and all that, but it's like the finicky thing with a butterfly is you could be a directional balanced butterfly. We're not getting into world of broken wing butterflies.
Yeah. Yes.
Okay. I do a balanced butterfly in this, it goes to my short strike on most of them, goes to the short strike too soon, like right away. Right. I'm like, where's my money? Because you don't get it. So it's more finicky that you needed to get the ideal with these time bond, with these directional butterflies, you want it near your short later in the duration. If it's a 0 day, later in the afternoon, if it's a 2 day, on that second day, right? Because if it goes right away, you're like, where's my money? Well, the problem is you're not getting much delta, but that's what makes them harmless, right? There's not
and
much
a fixed
delta.
loser. You're not worried about stop loss slippage.
Yeah, you're not
all these things people spend a lot of energy on.
Right.
This is just simple. And is this the kind? See, this is the kind of thing where, for new traders, they'd say, "Well, I don't have $600. Your average loser is $741. I don't have $750 to do on a speculative bet." Yeah. Now it's cheaper with the fly. Your average loser is what was your average loser on the fly?
$495.
Yeah, so $500. This is the ideal type of situation where you could do something like this in a smaller cash settled European style option like XSP. Again, the issue there is just the liquidity is different, but
or they could have done the butterfly, for someone smaller. I would have done it or considered testing it and see how it worked instead of 30 wide, maybe 15 wide.
Yeah. So, and here's another thing that would be interesting is to do it all. You could do it on a longer time frame, all as a percent based play. Running it since dailies. I mean, here's the thing. We still have 300 examples. So this is good. But I think that it would be interesting to do these over a long term, maybe using percents instead of a static offset. So that'd be something interesting for people to run.
Listen, we'll continue. The thing tomorrow that we can look at is maybe modeling this out a little bit, because there's ways to actually make this cheaper, and there's ways to make it to where you have a higher payoff as well. So you'll lose a lot more, but you will perhaps win bigger if you do it. So there's different ways to do it. There's different ways to model it. Great idea sending this in, because this is, again, sending in these ideas are how you kind of improve on trading, improve on backtesting.
Hey, Troy or Matt, do we have a minute you could explain? Maybe you were talking about maybe showing people who are maybe newer here on the backtesting, where you're talking about that percent versus static. Could you maybe?
Yeah, I tell you what, I could also do one for tomorrow.
Oh yeah,
we can fire one up.
Makes
for
sense.
Tomorrow.
Yeah.
And tomorrow we'll model it out a little bit.
Let's check on market, by by.
Oh yeah, what are we?
Well, we've pumped 3 points.
Troy, does the
3 points in futures.
There's a VIX of
down
17.
30.
Yeah, down. VIX is 17. Is it still is it engaged yet, Troy?
Listen, the boat's loaded. It's gonna take some high waves for the boat to go where it needs to go, but we're there.
Yeah.
So, all right, fellas, listen, we're gonna run. Have a great trading day, and we will see you tomorrow. Have a good day.